The market consolidates on Friday, so we zoom out for a bigger picture Elliott Wave understanding. This is Invest with Jacob. Okay, guys, so the market consolidated sideways on Friday with no real change in the counts. So today we're going to step back and take a bigger look at Elliott Wave and when and why we change our opinion on the market. But first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, forgive me. I am a little under the weather, so my voice is a little shaky today, but I'll do my best. We are going to jump into a big picture view so you can understand when and why we shift our opinion from bearish to bullish, or our primary path from bearish to bullish, or vice versa. And it's not just an arbitrary thing. So let's jump into the charts and take a look. Okay, guys, so here we are on the daily SPX chart. And I know I normally do the futures, but I wanted something a little more static. And so I have the SPX. I've charted it anyway. I normally have it charted just so I can check it when I need to. But overall, the whole point of what we're going to do today is we're going to understand when and why to change your opinion on the market. And the whole idea is that you need to know when and where you're wrong so you can adjust, because if you're failing to adjust and adapt to the market, you're going to fail to ever make money, and all you're going to do is throw money away. And so when we're looking at the market, we have key levels that must hold. And if they don't hold, things change. And that's when our opinion changes. So when we had the COVID lows, we had a 1-2 off of the lows right here. So you had a 1 up and a 2 down. And when you measure that 1-2, okay, the 1-2-3-6 comes in at about 4,800. You can see the green line right here. And we came up and almost hit it to the penny. And that's what I was saying way back here, is we should be seeing 4,800 for wave 3 of 3. And then we should see a pullback from that area. Well, we came pretty much in a straight line to 4,800. Then we pulled back off of that area. Now, this is wave 3 of 3. So the pullback would be wave 4 of 3. Now, if you know anything about the Elliott Wave rules, wave 4 cannot go into wave 1 territory. So wave 1 of 3 is right here. Okay, so on this pullback, we had an ABC down, and there's this wave 3 here. This was the first low, and they held just above wave 1, so we were okay. They started this move higher. And at that time, we thought we were holding the pattern and going to all-time highs, so we were looking for this move up to continue. We were looking for it to continue back up over this high. And then it failed and broke back through the pivot, and at that point, we had to start understanding what our options were to the low side. They came down, and when they broke through to the downside, right before we hit this bottom, I did an update to the big picture because they got into wave 1 territory. And so that makes this whole move up not impulsive. And when you don't have an impulsive move to the upside, you have to adjust what you're looking at and how you're viewing this overall pattern. So I put out a video in October of 2022, right before we hit this low, and I said we should be bottoming, but the bounce should be corrective, which it was. So we bounced correctively. And I said we should be going to 43 to 4,400 in a B wave and then down in C, because the most likely path is never a diagonal. And the only way to go higher once wave 4 enters wave 1 territory is a diagonal. So I always discount the diagonal first and have it as my alternate path. So in that video, if you go back and watch it, it's called the Big Pick Update. It's the main video on my channel. If you go back and watch it, you'll see me say I expect a B wave up and then a C wave down toward the 3,000 to 2,500 area. But I also say there is a bullish path, but it needs a lot of work, and we won't really worry about it until we cross that bridge. Well, we crossed that bridge. Why did we cross that bridge? Well, we came up in a wave 1, and then we pulled back in a wave 2. And I said that we should go to 43 to 4,400. This is kind of funny to me. The 1.0 extension of 1 and 2 was 44.24, which is just above 4,400, which is about what we were looking for. So nothing too crazy there. They literally extended 1 fib higher to the 1-2-3-6 at 45.97. So right here, wave 3 hit that 1-2-3-6 almost on the number. And everybody lost their mind and said, we're going to do all-time highs. We're never going to pull back, blah, blah, blah. And I said, no, we should still pull back. And the nature of that pullback will be important, because now we've extended up to the 764 retrace and the 1-2-3-6. So we're getting into some dangerous waters for the bears. And so if we got 5 waves down, then we would be looking at the bearish C wave. If we got 3 down, then we got more of a bullish setup on our hands. Well, the market being as difficult as it's been since I've been doing Elliott Wave, gave us a 1 down, a 2, a 3, but then wave 4 comes back into wave 1 territory here and invalidates it as an impulsive move. So now we're tracking a diagonal again. That makes it pretty difficult. So we have to adjust our opinion to, we'll have to see what happens after this bounce. And I actually just put out a video about diagonals in my training course. And that video is extremely important to understand. It's really hard to trade in diagonal settings because you get so many weird moves and so many crossovers and so many overlapping moves and corrective waves. Well, this bounce comes up and takes out the high, which invalidates the potential for us to be in C down. And because we have already pushed over the 764 on this move up, it becomes much less likely that this is going to be an extension up in B for C down. Can it be? Yes. Is it the most likely path? No. And that's all you have to know is what's most likely. So it's not the most likely path because we're already over the 764 retrace. In fact, we're within 100 points or so of the all-time highs. And more often than not, when that happens, they continue to the upside eventually. Now, we are looking for them to play out in an ABC up here in 5. So we would look for a B-wave pullback still, and that's why we've been looking for a pullback because that's the most common structure. And then 5 up. Now, does everything play out like the textbook every time? Of course it does not. If it did, we'd all be billionaires and we'd all be rich. So when people say Elliott Wave doesn't work, I kind of laugh because not only do I have these targets and understand where these targets are, I know where they fail and I know what happens when they fail. And that's what's really important to me. I don't mind being bullish or bearish. It doesn't matter to me. I mind knowing the overall pattern and understanding of the chart. Are there anomalies like a 600-point move straight up with no 2, 3, 6 pullbacks? Yep, we're in one right now. That's an anomaly in the whole market, though. You don't see those things. So I think every indicator would say we're overbought, but we continue higher. It's just a matter of understanding key levels, and that's all Elliott Wave is, and it's all rooted in technical analysis. So in the big picture, there's been a ton of overlap since the COVID lows, and that's really the overall understanding of this video is that this market has been challenging because of the overlap. I saw somebody comment, he thinks everything's a diagonal. Well, when wave 4s get into wave 1 territories in almost every wave, that's what you're looking at is a lot of diagonal structures. This pullback got into wave 1 territory over here, right? This wave 4 comes down into wave 1 territory, makes it less likely we're going to continue higher. But when they take out that high, you have to go with what's more likely at that point. So overall, that is the whole point of Elliott Wave. Overall, the counts are the same as they were on Friday. You can check out that video, but really we're looking at 4750 must hold, or we're looking at a direct route higher. But even then, we're still looking for a pullback in the most direct route that should test around 4631. So a little pullback and then up. But it would look a lot better with a bigger pullback towards the 4630 area, the 4400 area, and then up from there. So anyway, that's the whole deal with Elliott Wave. I wanted to do a more complex overview of it because nothing's changed on the counts from last week. And I wanted to kind of give everybody an understanding of when and why I switch my opinions. And it's because Elliott Wave rules tell me to and key levels tell me to. And it gives me a huge advantage over the market. And it's something we go over in our room every day, what the key levels are, when they break, what we're looking for, all those types of things. All right, so that is your market update for today. I will talk to you tomorrow.